Okay, so you're sitting at home in lockdown and don't know what to do with yourself, and you want to make a little bit of money. Okay, so you look into investing and trading and wonder what's different. So I'm here to tell you what are the key differences between investing and trading, and the list I'm about to show you is not supposed to be an exhaustive list of things, the key differences, but it's just the main ones that I find. So trading is about holding the assets for a shorter period of time. You're talking about milliseconds. So you're scalping to a number of weeks, depending on your mood, really, or the mood of or how you feel about the market, or how you feel the market is feeling about the market, really. And that's the key word. It's about all about feeling. It's about the psychology, reading the other person's psychology or the wider market psychology based on prices, which is our second point. That is mainly focused on prices, and because you're focused on prices, you have and you're on a shorter period of time frame. There tend to be more volatility, and it could be a good thing for you depending on your trading style. If you're a swing trader or you a momentum trader, and if you're really good at what you're doing, maybe you make a little bit of money. But I'm talking about you're really good at what you're doing. Um, so it is a way to get rich really quickly, but it's also a way to get poor really quickly also. And unfortunately, most of the time, beginners be going into trade, they are losing money all the time, myself included. I've traded before and it doesn't work for me, and I've lost money. Now, on the other side is investing. Investing is about holding the asset. Most of the time, it is stock for a longer period of time, and you're talking in years. You're talking in 2 years, 5 years, 10 years, 2 decades, 30 years, and so on and so forth. And you're more focused on the value of the asset. So the value is basically what it is, what it's worth right now, not the actual price, what it's worth right now, and what it will worth in the future. And because you're talking about a longer period of time, you spread the volatility over that longer period of time and you get more stability. So you do have some downturn in the market that really ruined the really people underestimate the price of the stock, the value of the stock because of a sellout. And actually, those are the great times to buy, like during the great financial crisis or right now. I'm not telling you to go out and start buying stock because that's a different part of it. That is about how to invest, not the difference between investing and trading. So, because you spread the volatility over a longer period of time, you tend to get less volatility. Of course, some stock are more volatile, such as stocks in smaller companies, stock in more speculative companies, like new companies in the kind of like new market, like let's say marijuana. That was a really big one last year, where stock a company could jump by 200-300% in a few days. So again, that kind of more on the line of trading, because in investing you want to look for a good solid company with good track record and good management. So there's a few things to investing, and we'll save that for a different video. And the thing about it is that you learn to be richer. With investing, you shouldn't have that mindset to be rich overnight, because that's not how it works. Because you're looking for that growth on growth, which is the compound interest. So you get 5% this year on your initial capital, and you might get another 5% on the 5% on the capital. So you grow and grow and grow your portfolio and your capital and the value that in your stock. And that's the key differences between investing and trading.